Nathan McCauley. I'm the co-founder and CEO of Anchorage Digital. We are the first federally chartered digital asset bank. So we provide banking services exclusively to institutional counterparties, institutional investors, but focused on digital assets. So we hold Bitcoin in our bank, we hold Ethereum in our bank, we hold a whole host of different assets from DeFi assets to NFT assets. And when interacting with us, you can know that you're in the safety and soundness of a national bank, while also having a very secure and flexible way to access your assets and utilize those assets in various ways you might like to do so.
Awesome. So before we move into like what you're doing and with whom you're doing it, I'd love to hear about your background. I know you were at Square. And maybe tell about the genesis story about why Anchorage and why create a bank to do what you want to do.
Sure, yeah. So I was, as you mentioned, I was very fortunate to be an early employee at Square, where I, of course, with the rest of the team there, got to work on a bunch of the early stage projects, including the early Square card readers, and actually was like specifically focused on the security around all the card readers. Was lucky enough to be put on the patent for the readers, and then over 4 years at Square, really helped kind of shape and mold the security architecture of the entire Square ecosystem, from the services that Square ran to the devices, wallets, kind of everything across the board. And then spent some time after Square at a company called Docker, where I worked on cloud computing technology that is now basically used in every cloud environment, whether it's Amazon, GCP, Azure. Most of the internet connected services that you're using today are probably running in Docker. So got to spend a bunch of time there. And then my co-founder and I, after having to work together at Square and at Docker, really saw this opportunity for institutional infrastructure around crypto. Kind of looked at the crypto landscape and understood that holding digital assets was not going to be holding like traditional assets. It wasn't going to be holding like holding stocks. It wasn't going to be like holding bonds. And we saw what we felt was an over-reliance on this notion of hot versus cold storage. This idea that cold storage is somehow safe but unusable, and hot is unsafe but usable. And we thought that there shouldn't be this trade-off. You should be able to have both. You should be able to have very flexible uses of your assets. You should have access to all your assets at the same time, but it should still be able to be secure. So we used a bunch of our security training and security background to design a system. What was clear when working with institutional investors is it wasn't enough just to build the tech. You also needed to solve the regulatory problems. And so we kind of at the beginning decided that we would be regulatory trailblazers, that we would go out there and kind of push as hard as we could in order to get regulated entities and get crypto and blockchain assets into regulated entities. That took a long time. It actually took 3 years before we got our bank charter. It did, of course, pay off after we got it, but it was really responsive to clients' needs. Institutional clients need to hold assets in a regulated institution. And so we wanted to create the premier regulated institution. So provide best of breed tech, best of breed regulatory clarity, and then really kind of advance the whole space by doing so.
Great. And was it clear that during that 3-year period that you were going to get a license?
So we tried a bunch of different approaches. We looked at state regulators. We looked at SEC, potentially creating a broker dealer. And then we looked at the bank as well. So we looked at basically all of the available options in order to get regulated entities. I have to be honest that it was not clear that any of them would work.
Right.
But now it's it was kind of one of those things where it's like, okay, something is going to pay off here in this portfolio of different regulatory things that we're pursuing, and then eventually the bank charter itself came to fruition.
Amazing. So let's dive in. The topic title that we're talking about today is how banks are positioning themselves to move into digital currencies. And I assume you're having lots of these conversations with banks now. And so hearing your vantage point into what they feel their opportunities are, some of their challenges, that's what I want to get to. But what areas of intersection for crypto and traditional finance do you think are most exciting right now?
Yeah, I think there's a lot of really interesting, what I would call crossover products. So if you look at kind of the baseline set of services that banks and brokers and just kind of like baseline stuff is allow people to hold assets and allow people to buy and sell assets. So anything from a bank that's attached to a broker dealer, allowing sort of investments as well as banking services. you kind of look at that as like sometimes these offerings kind of come together as much as they can. And so crypto represents a new entrant into that space. So banks can say like, hey, we're going to hold your dollars. There might be an associated broker dealer. We're going to hold your investment assets. And we're going to start to say, hey, we're going to hold your Bitcoin. We're going to hold your Ethereum. We're going to bring in another set of assets there. So straightforward buy and sell use cases. What ends up getting interesting there is then what are the building blocks that get built on top of that baseline set of services? For example, lending against crypto assets. So if somebody is bringing in Bitcoin into the bank, is it possible for the bank to then lend against those assets? So this is a really interesting model where the new on crypto is matching with the old of collateralized lending. And so that's a very nice kind of first pass at starting to look at that. And I think once you see some of those things start to come together, you see that there's actually a lot of crossover that we're going to be able to do. Everybody wants to start small. Everyone wants to start unassuming and then build up to things over time. But we are right now at the precipice of starting to look at like a really rapid transformation on seeing a bunch of these services kind of start to be offered and come to pass.
And so how do you see traditional finance and digital asset innovation evolving together? Because it sounds like you're just meeting right now, right? Like, at this precipice that you're talking about.
Yeah. I think the way they end up coming together ends up being multifaceted. So you look at, say something like some of the early stuff that's going on with, even just take, for example, USDC. USDC is a stable coin where it is effectively a dollar that is wrapped and is now tradable on a blockchain. And it's extremely popular product. What if we started doing that for equities? What if we started doing that for securities so that securities could be represented on blockchains and be able to settle instantly? You would have fundamentally less counterparty risk, and you could build kind of a set of clearing and settlement services that would systematically reduce risk in the entire marketplace. Very early in that process right now, but that's one of the areas that looks pretty exciting, and it looks like a way to not just take blockchain-based assets and bring them into the old world, but also take kind of the existing world and bring it into the blockchain. So there really is kind of a two-sided integration that needs to be going on, and pretty exciting to look at what is possible there.
And how evolved, Nathan, are banks thinking around crypto right now? Are they dipping their toe in the water? What's driving them? I guess, can you give us a flavor for the conversations that you're having?
Yeah, I think the easiest and the most clear synthesis that I could give, and I've had a chance to talk to most of the large banks in the country, and a lot of the regional banks and kind of forward-leaning banks. Everyone is thinking about what is their crypto strategy. I would say over the past several years, it has become very clear what the set of services are that a bank could provide. 2020 gave us clarity that banks are allowed to provide these kind of services, whether it's stablecoin, custody of Bitcoin, what have you. And so we're at the point now actually where most of the large banks are actually quite sophisticated in their thinking around what the strategy should be. The holdup is that it actually takes quite a lot of work to make something happen in a bank, whether it's internal sign-offs, getting the technology integrated and due diligence on the service providers, incredible amount of complexity on regulatory, legal, and compliance. And so a lot of those things are the kind of the next frontier of things that need to be solved in order for people to really go live with some of these services. And so as we look out for the next several quarters into years, I expect that what's going to be happening is the existing strategies that are there, playbooks that are like well understood at the banks, are going to start getting rolled out. They're going to pick business lines to start. They're going to pick service providers. They're going to pick strategic directions and then start executing over them.
And I guess in terms of the conversations that you're having, I'm trying to get a flavor for the banks, like whether they're responsive to a demand that they have from customers, say, hey, we want to trade crypto, or what's the gamut, or are they thinking strategically about transforming their organizations?
Yes. So I'd say the most direct trend that banks are seeing, particularly the large banks, is a withdrawal of deposits from bank accounts into crypto companies. So they're very clearly saying that people are taking the assets that are held either in the retail bank or in the private bank. Those assets are moving away from stocks, bonds, and cash positions held in the banks to crypto infrastructure players, presumably in order to buy Bitcoin. And so the only conclusion that these banks can come to is they are losing market share, losing share of wallet to crypto investment. And so therefore, there is a present loss of business that is happening that they would like to be able to maintain over time. And so that is kind of the most pressing and obvious area where the banks really want to take some action. Beyond that, there are quite a few that are thinking more strategically, which is to say, what is the overall banking stablecoin strategy? What is the overall banking securitization strategy? And started thinking very, very long-term, thinking but more in decades rather than thinking in quarters or years around transformationally where are things going to go and what is the first step on that transition. As an example there, I think Visa has been extremely forward-leaning. Visa is working with us on stablecoin settlement within the Visa network. So anywhere in the Visa network where there are a set of counterparties that both want to deal in USDC, you can do live transactions in the Visa network entirely denominated in stablecoins. Never settle in dollars, never have to convert down into dollars, keep it in, the payment happens in stablecoin, the settlement happens in stablecoin. And so you're starting to see the very beginnings of this come to pass. And it's gonna be a long build, but it's gonna be pretty exciting to see some of this really roll out and get widespread usage.
I know we've been covering the NFT space a little bit over the past few months, and obviously Visa made a purchase recently. But are you seeing financial institutions serious about getting into that space?
I think,
or is it
generally speaking, that's one where there's a lot of wait and see.
Yeah.
Kind of let's synthesize what this is. Is this something that is a long-term trend? Is it the popular thing of the day?
More sizzle than steak, right?
Yeah. How much staying power does it have? And then how much rationality or irrationality is there in it? And it's kind of one of the things where it's a little bit harder to pin down the value of art in a meaningful way, and sometimes it's just in the eye of the beholder. So it's going to be interesting just to see what develops there and what kinds of use cases get built on top of some of these NFT experiments.
So maybe you could talk about what your partnerships look like with financial institutions, like how they're structured, what kind of value exchange there is in those partnerships. Sure.
Yeah. Maybe two to talk about. One is the Visa partnership that I mentioned earlier. Visa partnership. We're looking at working with them in a number of ways. They're wanting to allow stable coins to settle on the Visa network, particularly USDC. And so we have the settlement bank behind that system for them. So we act as a settlement agent, the same way that Chase acts as a settlement agent for Visa on the US dollar side. So that's a kind of natural partnership, and we're working with them on that. Another area we have is we're working with banks. And so several banks throughout the country want to get into the crypto collateralized lending business. They want to start lending against crypto as collateral. And so they like working with us because we hold the collateral, we do the collateral management, we do the 24/7 mark to market on the value of the Bitcoin held as collateral against those loans. And then the banks deploy their balance sheets. And it's another way to earn yield on the balance sheet, especially in like a low interest environment. It ends up being a nice additional source of revenue for those banks. So we're live with 2 banks now and looking to expand that program pretty substantially over the next several years with more and more financial institutions coming in. So those are the 2 that are kind of live and ready right now. Additionally, over the next several years, we're looking at rolling out quite a number of partnerships with financial institutions around being a crypto enabler for fintechs and for banks that want to allow buy, hold, and sell of crypto. So let's say you're a fintech with a client base that wants to be able to invest in Bitcoin on your platform. We can provide the infrastructure layer for you and the regulatory layer because we can do it all through our bank license. Same story with banks. Banks that want to come in and they want to say, hey, we want to offer Bitcoin, Ethereum, buy, hold, and sell to our clients. We're going to sub-custody that with Anchorage, and Anchorage will help us on the custody side, on the trade execution side, and really be kind of the overall tamer of the blockchain complexity and allow us to move forward with some of those business models.
And I guess this is a strategy for Anchorage, but do you ever intend to have direct relationships with end users, or is it always through this partnership model?
We don't think it's particularly helpful for us to be retail facing. Many of our partners want to be retail facing, whether that's fintechs or banks. And so we actually pretty specifically want to stay out of that business in order to keep ourselves uncompetitive. We want to be kind of truly aligned incentives with our partners. Therefore, we think it's particularly prudent to stay out of that business and focus ourselves exclusively on institutional and infrastructural use cases.
And just curious. And what are you seeing about adoption from institutional investors?
So every year, more and more institutional investors are coming in. I think a few years ago, you see the first pensions start to come in and invest in crypto firms. Now we're at the point where most of the large global macro hedge funds are looking at some sort of a Bitcoin allocation. And when maybe they start with Bitcoin, but then they say, hey, look, this isn't just Bitcoin. It might actually be that most of the upside and returns are in these other assets. And those are actually doing quite well. And they represent really a new way of building infrastructure, of building companies. So we need to start investing in those. And then really when you see the multi-asset strategies kind of come to pass, that's where you really start to see Anchorage be the meaningful partner to a lot of them. And so we're seeing lots of interest on the buy side, what Wall Street at least calls the buy side of investing. And then additionally, the sell side are also institutions, wanting to provide these services to others, have a way to integrate Bitcoin into a bank, for example. So institutional adoption increases every year. One of the nice things for us is we're also seeing government adoption. So one of the nice things is that we actually got a contract with the U.S. Marshals Service. Anytime they need to seize Bitcoin because it's involved with criminal activity, we are the custodian and liquidation agent for them. Allow them to sell off those assets and return the proceeds back to the budget. So lots of different use cases that are developing on our side, and pretty exciting to see the increased institutional adoption.
Are there use cases that I know it's still early days, but are there use cases that you're seeing that surprise you, that you wouldn't have expected when you started Anchorage?
I think even myself, I was surprised at the idea that Visa was buying an NFT. For example, that was really an interesting one to look at and try to say like, hey, look, there's something really here. We don't know necessarily exactly what it is, but it's pretty exciting. I think I've continued to be surprised at how popular stable coins are. Mm-hmm. In a community that prides itself on appreciating decentralization, maybe even disliking some aspects of the fiat monetary policy system. Despite all of those kind of stated feelings, it turns out the community really likes the dollar and really likes different packaging for the dollar. So I'd say that one's been a little bit surprising and is maybe bullish for the dollar in a way that not a lot of people necessarily expect.
That's interesting. Well, is it also bullish for stablecoins in general over, I guess,
absolutely
your play? Yeah.
Yeah, I think so.
What does your charter mean for the industry overall? Because as you said, you were the first. There haven't been too many charters. There may not be for a while, from when I understand. What makes Anchorage different now that you have that charter?
I think the bigger story there is the industry-wide implications. Mm-hmm. That the fact that there is a bank operating at the national level that is able to hold digital assets. This is an incredibly positive signal to the whole industry that there is a regulatory legitimacy to this asset class because there's a federal bank that's able to hold it. So the fact that it's Anchorage is just a privilege that we were lucky enough to be granted. But really, this is a win for the crypto industry overall to say that, hey, look, the industry has arrived in a sense in that there are now fully legitimate, federally regulated ways to hold this asset. And I think that as a kind of a leading indicator of the things that is to come in the space is incredibly positive. It's of course great for us because it means we're able to operate at the national level. We can be a qualified custodian unambiguously. We can act as a control location for securities, a bunch of different great stuff that we're able to do because we're regulated at the federal level. But certainly the leading story there is the story for crypto more broadly.
So I'm curious, just as Anchorage as a startup, right? You're a startup bank, right? Been at it just for a few years. Like, what are some of the challenges you guys face scaling and being able to deal with, a big pipeline?
Yeah, so I think there's a lot of problems with scaling. The first maybe most difficult problem with scaling is scaling the Anchorage team. Mm-hmm. The Anchorage team, there is not a single team at Anchorage that isn't a trailblazing team. The sales team needs to trailblaze on sales, regulatory, compliance, even finance, the accounting treatment of these assets and how to pass audits when you are a custodian for crypto. So you have to build a team of truly experts in every single field that are doing things that nobody else has ever done before. Most organizations, you get to kind of just assume that a bunch of the services are like roughly commodities that you can just kind of like pull off the shelf. In our case, every team has to be really a rock star team just in order to be able to keep things going. I'd say scaling around technical complexity, implementation of blockchains, implementation of assets, and if you're going to be holding billions of dollars of assets of some brand new blockchain, that is actually a very, very difficult technical problem that requires extraordinarily careful engineering that is kind of inherently unscalable. If you're a traditional custodian, you hold Ford, you hold GM, it's the same tech. If you hold, if you hold Flow and Ethereum, it is wildly different. And so the tech challenges are nearly insurmountable and take a lot of time and attention.
And you have the typical struggles of a new company forming, revenues coming in versus being able to invest in your own business. And this is, it sounds like you're right. You use the word precipice, right? At the point of your more clients really coming in and adopting you, and yet you have to bootstrap and be able to fund your operations too. So it sounds like a big challenge.
Yeah, that's right. The good news there is that it's clear to much of the capital markets community that a service like ours is needed and particularly helpful to the industry. So I'm not at all worried about kind of our capital position and our ability to kind of continue to fund ourselves there. We're actually in quite good shape, but certainly continuing to onboard clients, continuing to serve those clients, particularly at institutional level, it's very important to have really rock solid customer support, customer experience. And so we want to maintain a very high bar of institutional white glove service that we give to all of our clients.
And so are you hiring talent for those teams from the traditional industry? Or are you pulling people from elsewhere? How are you building those teams?
Yeah, so we definitely hire from traditional financial institutions, especially most recently, say, building out our lending team. Our lending team, a lot of them have come from structured products, credit, and thinking through the best way to build products in that area. We end up needing people with a variety of backgrounds. And so the ideal team at Anchorage is a team that itself blends the two models, understands startup, understands tech, understands banking, and understands traditional finance. So the really great teams are the ones that bring together a whole mix. And then each team's DNA is able to be both bank native and crypto native at the same time.
We have a question that came in from the audience from Arvind. Arvind asks, what are the risks to your strategy?
What are the risks to our strategy? I think the biggest risks to our strategy is certainly the leading risk there might be just like overall regulatory situation. I think there's a big debate, kind of broadly on how the various federal agencies are going to look at crypto, look at the whole ecosystem. whether it's lending programs, whether it's DeFi, whether it's securities analysis. And the debate there largely rests on, will crypto happen within the United States, or will it be more of a global phenomenon and less of it happen here? And so the fundamental risk there is that like more of this happens maybe in other nations because we take a particular regulatory approach here that doesn't lend itself really to like the innovation that needs to happen. And so that's one of the things that's kind of on my mind to think about is like, how do we make sure that we as a member of the industry maintain very good relationships with the regulators, so everybody kind of understands that this is the path for America to maintain global financial hegemony, and that being pretty strategically important to America. It's kind of important to see that happen and play out.
I feel like there almost needs to be like a new Bretton Woods type moment in the U.S. history. One last question for you, Nathan, before we go. I'm kind of curious, like, what do you think, sitting where you're sitting, having had all the conversations you've had, speaking to all the major banks in the U.S., like, what are you most excited about in terms of opportunities moving forward?
Yeah, I'd say the biggest opportunity is that Bitcoin itself is pretty special. In many ways, it was a financial innovation, but you also might actually say that it was even more fundamentally a sociological innovation, in that what was created with Bitcoin is effectively a global public utility. It is a utility that is available to everyone on Earth in a meaningful way. That wasn't necessarily a thing that was available to everybody on Earth in such a significant way. And I think the true optimism of the crypto community is maybe we could make dozens of those. Maybe we can make hundreds of global public utilities that can be a shared set of resources and infrastructure for the whole planet. And so when I kind of abstractly look at what is going on here, that's the thing that truly gives me optimism, is that we have something to reconnect the world on a shared set of global infrastructure that everyone can feel a piece of ownership of, because nobody particularly owns it. And I think that's pretty special and something that should be cherished.
Got it. Really appreciate our conversation today. Thanks for joining us at Convergence, Nathan.
Yeah, thanks a lot, Zach. Appreciate it.
All the best.